Ever feel like your money is just sitting there, not really working for you? Like it's in a savings account, sure, but it's barely growing and you're missing out on potential returns? You're not alone. Many people struggle to find the right balance between easy access to their funds and maximizing their earnings. That's where cash reserve accounts come in, offering a sweet spot between liquidity and return. And today, we're diving deep into one specific option, the Truist Cash Reserve account. How do you qualify? What are the benefits? And is it the right choice for your financial situation? We're going to break it all down for you, so stick around. Before we jump into the Truist Cash Reserve specifically, let's talk about the general concept of a cash reserve account. Think of it as a hybrid between a checking account and an investment account. It typically offers higher interest rates than a traditional savings account, while still allowing you relatively easy access to your funds. This makes it a great option for money you might need in the near future, like a down payment on a house, emergency funds, or even just money you're saving for a big purchase. It's not designed for day-to-day spending. You'll still want a checking account for that, but it's perfect for parking cash that you want to grow a little bit faster. Now, let's focus on the Truist Cash Reserve. What makes it stand out? Well, one of the biggest draws is often the competitive interest rates. These rates can fluctuate, of course, depending on market conditions, so it's always a good idea to check Truist's website for the most up-to-date information. But generally, you can expect to earn significantly more than you would with a standard savings account. So, how do you qualify for this potentially lucrative account? That's the million-dollar question, right? While the exact requirements can change, there are some common factors that banks consider. One of the most important is your credit history. Truist, like most financial institutions, will likely pull your credit report to assess your creditworthiness. A good credit score demonstrates responsible financial behavior and increases your chances of approval. Another key factor is your income. Banks want to see that you have a stable and reliable source of income. This helps them determine your ability to manage your finances and meet any potential obligations associated with the account. You'll typically need to provide documentation, such as pay stubs or tax returns, to verify your income. In some cases, Truist might also consider your overall financial relationship with the bank. If you already have other accounts, like a checking account or a mortgage, that could potentially strengthen your application. It shows a commitment to the bank and can be a positive factor in their decision. Now, let's talk specifics. What kind of documentation will you likely need to gather? Be prepared to provide personal information, such as your social security number, date of birth, and address. This is standard procedure for opening any financial account. As mentioned earlier, you'll also need to provide proof of income, which could include recent pay stubs, W-2s, or tax returns if you're self-employed. If you have other assets that you want to be considered, such as investment accounts or real estate, it might be beneficial to include documentation for those as well. Opening a Truist Cash Reserve account typically involves an application process, which you can usually start online or in person at a Truist branch. The online application is often the quickest and most convenient option. You'll fill out the required information, provide the necessary documentation, and submit your application electronically. If you prefer a more personal touch, you can always visit a branch and speak with a representative who can guide you through the process. Now, here's a crucial point. Be sure to read the fine print. Before you finalize your application, carefully review the terms and conditions associated with the Truist Cash Reserve account. Pay attention to any fees, minimum balance requirements, or restrictions on withdrawals. Understanding these details up front can prevent any surprises down the road. One common question people ask is, what's the minimum deposit required to open a Truist Cash Reserve account? This can vary, so it's essential to check with Truist directly. There might also be ongoing minimum balance requirements to avoid certain fees or maintain the advertised interest rates. Another important consideration is the interest rate itself. As we discussed, the interest rate offered on cash reserve accounts can fluctuate. It's tied to market conditions and can change over time. So, while it's a significant benefit, it's not guaranteed to remain constant. Keep an eye on interest rate trends and compare them with other options to ensure you're getting the best possible return. Beyond the interest rate, what other benefits does the Truist Cash Reserve offer? Depending on the specific account features, you might have access to online banking, mobile banking, and even linked debit cards. These features can make managing your funds easier and more convenient. Some accounts might also offer overdraft protection or other perks. Now, let's address a critical question. Is the Truist Cash Reserve right for you? The answer depends on your individual financial goals and circumstances. If you're looking for a safe and relatively liquid place to park cash that you want to grow faster than a traditional savings account, then it could be a good fit. If you need immediate access to your funds for frequent transactions, a checking account might be a better choice. And if you're looking for long-term investment growth, other options like stocks or bonds might be more appropriate. It's also essential to compare the Truist Cash Reserve with similar accounts offered by other banks and financial institutions. Don't just settle for the first option you see. Shop around, compare interest rates, fees, and features, and choose the account that best aligns with your needs. Remember, managing your finances is a marathon, not a sprint. It's about making informed decisions and choosing the right tools to help you achieve your financial goals. The Truist Cash Reserve could be one of those tools, offering a valuable balance between liquidity and return. But it's crucial to do your research, understand the requirements, and make sure it fits into your overall financial plan. With that said, thanks for watching, and until next time.